Just when you feel like you are starting to get your head around crypto, a shiny new investment enters the market: Bitcoin ETFs. And the question on everyone's mind: is a Bitcoin ETF better than the real thing? Hi, I'm Shannon Terrell from Finder.com, and today we are doing a deep dive into the differences between Bitcoin and Bitcoin ETFs. Let's get into it. Let's start by talking about what a Bitcoin ETF is and what it isn't. For the most part, a Bitcoin ETF is exactly what it sounds like: an exchange-traded fund that offers exposure to Bitcoin. As for how much exposure, we'll get to that in a minute. But first, let me quickly break down ETFs for those that are unfamiliar. An ETF is a fund that invests in a collection of assets, similar to a mutual fund, but trades on an exchange, like a stock. Investors buy ETFs to gain exposure to the assets in the fund without having to directly purchase those assets individually. They're typically a solid pick for investors seeking a no-fuss way to diversify their portfolio. Bitcoin ETFs offer investors an indirect way to invest in Bitcoin, but don't actually offer the cryptocurrency itself. In fact, the Bitcoin ETFs approved in the US don't actually hold Bitcoin at all. They hold Bitcoin futures. What's a Bitcoin future? I'm glad you asked. Bitcoin ETFs invest in Bitcoin futures contracts, which essentially represent a bet traders place on the future price of Bitcoin. These Bitcoin futures don't offer direct exposure to Bitcoin. They're speculative, and they track Bitcoin's spot price, but won't directly match Bitcoin's performance. For those who really want to get into Bitcoin, this could be a bit of a deal breaker. Of course, there are advantages to investing in Bitcoin ETFs over Bitcoin itself, and drawbacks. Let's get into those next. Why invest in a Bitcoin ETF if it doesn't offer direct access to Bitcoin? Well, there are a couple of reasons actually. First, it's convenient. It's hard to underemphasize just how sizable a benefit this is. But Bitcoin ETFs are available through many online brokers and trading platforms. That means that if you already have an online trading account, you don't really need to jump through any hoops to add this investment to your portfolio. No separate accounts, no new unfamiliar platforms. You just invest the same way you would for any other investment. And two, it's familiar. ETFs are pretty commonplace for the average investor. In fact, you might have a few in your portfolio now. And that means that backing a Bitcoin ETF is a far more plausible stretch than going out and buying Bitcoin itself. Now, before you go adding any Bitcoin ETFs to your portfolio, there is a case to be made for investing in Bitcoin directly. Why invest in Bitcoin? First, it's direct investment. Bitcoin is, well, Bitcoin. No indirect exposure here. You get the real thing and nothing but. And for those seeking a direct path to crypto, this is the way to go. Plus, Bitcoin is a currency that can be used to make direct purchases. Can't do that with an ETF. Plus, it trades 24/7. Unlike ETFs, which can only be bought and sold during market hours, Bitcoin trades 24 hours a day, which means there's nothing to stop you from monitoring and exploiting price swings around the clock. And it's decentralized. Now, this could be interpreted as both a pro and a con, but Bitcoin isn't controlled or monitored by any centralized bank or government, which means it isn't subject to inflation and it isn't swayed by the actions of the Federal Reserve. Ultimately, the right choice between Bitcoin and Bitcoin ETFs depends a lot on your investment strategy and your financial goals, both short and long term. That said, there's nothing to stop you from buying both. If you're keen to invest, here's how to get started. First, pick a platform. Not many traditional trading platforms offer access to cryptocurrency, so if you'd like to buy Bitcoin, you'll first need to find a platform that offers access to it. You can offer a dedicated cryptocurrency exchange like Coinbase or Gemini, or you can opt for a trading platform that offers access to Bitcoin like Robinhood, SoFi, or Webull. If you're looking for a Bitcoin ETF, you'll have greater selection since most trading platforms offer access to ETFs. Next, you'll need to open and fund your account. Once you've narrowed down your platform options, complete the account application and fund your account. A quick heads up. If you're opening an account on a dedicated crypto exchange, you'll need to be prepared for the Know Your Customer process. US crypto exchanges require photo ID and a copy of a recent bank statement or utility bill that has your address on it. Finally, you'll need to place your order. If purchasing Bitcoin, simply plug in the amount in US dollars you'd like to purchase, and your exchange will calculate the amount of Bitcoin that you'll receive. If you're purchasing a Bitcoin ETF, simply enter the number of shares that you would like to purchase and hit submit. And that's about it, really. From here, you'll want to monitor your chosen investment to track its performance like you would any other investment. To learn more about Bitcoin or Bitcoin ETFs, visit our page on Finder.com. You'll find the link in the description box. And be sure to like and subscribe to stay up to date on the latest Finder videos. Thanks for watching.